Good day, Matrix. For week 10, you need to complete 13.3 and 13.4. I will be completing 13.2 for you. It is just a refresher because cost accounting, or otherwise known as manufacturing, has been introduced in your grade 11 curriculum. Alright, so 13.2 I'm going to go through with you just to get you remembering all those concepts that we went through last year. Alright, so let's see what they are asking of us. Rally Bike manufacturers produces racing bikes that they then sell to various retailers at a markup of 50%. Remember, your markup is the profit that you're adding onto your cost price in order to get your selling price. And the financial year is the 28th of February. Using the information given below to prepare the following for the financial year, you need to do your production cost statement and all relevant notes in order to show your workings. They give us our information. The following opening balances appeared in the books on the 1st of March 20.7. Raw material stock account 80,000, and then the work in progress stock account 40,000. And this is additional information. If you're not clear on the actual textbook picture that I've got over here, please refer to your actual textbook, and the page number is 437. Alright, but just to get you familiar again with all the concepts, direct materials mean materials that form part of the item produced. Indirect materials are materials that are used in the manufacturing process but do not form part of the item produced. Direct labor, labor directly involved in the manufacture of the goods. Indirect labor, labor used in the factory but are not involved in the manufacture of the goods. Prime cost is the sum of your raw materials and you adding your direct labor. Your factory overheads is all the expenses incurred by the factory. Alright, fixed costs are costs that remain constant over time. Variable costs, on the other hand, vary from month to month. Your total cost of production includes all costs involved in the production. Unit cost is the cost of one item produced. Your markup, as I said in the beginning, was the profit made on the goods produced. Your selling price is the actual price that you sell your goods for. Alright, so let's go back. I am now going to be filling in the notes to this financial statement, and in turn I am going to be finishing off with the production cost statement. For the activity, they do not want the income statement for the year ended, so we do not have to complete that. All that we're going to do is the production cost statement and then the notes to the production cost statement. Right, so we are starting off with note 1, which is your direct material cost. Now remember, you have an opening balance for your direct material costs, which is the 80,000. As you see, the following opening balances appear in the books on the 1st of March 20.7. So what are you going to do now, Matrix? You are going to take it to this point over here and you are going to write 80,000 Rand. Moving along, you now need to go and figure out what have I purchased. Okay, net purchases. Did I buy direct material either cash or credit? So let us go and have a look. Yes, we did these two over here, the first two transactions. Raw materials amounting to 200,000 were bought on credit. Raw materials amounting to 60,000 were bought for cash. Alright, so irrespective whether it was bought cash or credit, I need to add it because I've purchased raw materials. So I'm going to open my bracket because I need to put in the calculation. 200,000 plus the 60,000. So in total, the net purchases is going to be 260,000 Rand. All right, then not forgetting your carriage on purchases. All right, your carriage on purchases basically to bring that raw material to the place of business. Carriage on raw materials, again, do you see the raw materials always showing up? Paid by check amounted to 30,000 Rand, and we are going to place that over here, and your details will be carriage on purchases. And they told us that the carriage on purchases amounted to 30,000 Rand. All right, then you are going to add this amounts up that we just figured out. So 80,000 plus 260,000 plus 30,000 will give me a value of 370,000 Rand. All right, matrix. As you can see, they're asking us for the closing stock. Now, if you have a look at your information, there is a question mark at our closing balances. We don't have the raw material stock account balance. So what have we got to do? We have got to work back. So somewhere in this information, they will give us the clue. And you are looking at number 10 over here, where they say raw materials issued to the manufacturing process during the year amounted to 330,000 Rand. All right, so that they telling you how much raw materials you have used throughout the year. So you'll put that over here, 330,000. Okay, so remember matrix, everything that should be, we're working back now, everything that should have been added will now be subtracted, and everything that would have been subtracted will now be added. So what am I going to do in order to get the closing stock, what I have left? All right, 330,000 subtract 370,000 will give us a difference of 40,000 Rand. All right, now note number 1 is finally complete. Moving on to direct labor. Remember, direct labor is the actual people who are working with the product, who is directly involved in manufacturing this product, the bicycles. All right, so again, what are you going to pay them? You are going to be paying them factory wages. They are working in your factory, and there will be a calculation. If you go to, let's go and have a look at the adjustments. Salaries and wages paid amounted to 210,000, and then they specified further for us. Of the 210,000, 100,000 of this was for direct labor, 60,000 for indirect labor, and then the balance would be for administration. Now remember, ladies and gentlemen, I am only interested in the direct labor at this point. So I'm going to take 210,000. Well, they basically gave me what my direct labor is all about. They said 100,000. But your marker will want to see the calculation. So you'll take 210,000. Subtract this 100,000 to just get the balancing figure, but if you put 2 and 2 together, you will know that you need to subtract 110,000 from that in order to get the total of 100,000. Nice and easy. We are now moving on to our factory overheads. Now remember, your factory overheads are all expenses incurred by the factory. We're not interested in the selling and distribution department or the administration department. All of them have their own little niche. For now, we are only focused on the factory. So let's go and have a look. Consumable stores bought for cash amounted to 24,000 Rand. Okay, so consumable stores is a factory overhead, so I'm going to place this over here, consumable stores. And remember, there will be a calculation, because if you have a look at our workings, our information, they said that we have consumable stores on hand. Now remember, anything that is left on hand becomes an asset, so it needs to be subtracted from the actual expense. All right, please remember that. So it's going to be 24,000 subtracting what we haven't used to get the actual expense amount. So 24,000 subtract 6,000. What did we actually use in the factory for the year? We used 18,000 Rand worth of consumable stores. Remember, your salaries and wages for your indirect laborers, and you can even use the term indirect labor, just to make it easier for you to remember. Indirect labor. What did they say about that? They said that, where are we now? Salaries and wages amounted to 210. Of that was 100,000, and then the 60,000 Rand was for indirect labor. Okay, so what am I going to do? I'm going to put the 60,000 Rand over there. Moving on, remember, depreciation is an expense that each and every business, a cashless expense that each and every business that have assets will incur. So let's move on to our depreciation. It's nice and in our face. Number 6, depreciation written off for the year amounted to 26,000. This was on factory equipment 16,000, office equipment 3,000, and sales vehicles 7,000. Remember, factory overheads is only interested in the factory, so the depreciation for the factory is 16,000. I'm going to place my 16,000 over there. And then we have rent. Let's go and have a look at what rent has got to say. The rent amounting to 200,000 was paid during the year. This amount must be divided in the ratio of 3:1:1 between the factory, the office, and the sales department respectively. So how do we do this calculation matrix? Let's go and have a look. So they say that the overall rent was 200,000, and it needs to be divided in the ratio of 3:1:1 respectively. 3 being the factory, 1 being for the admin block, and 1 being for the selling and distribution block. All right. What are we interested in under factory overheads? We are only interested in the factory. So now let's do this calculation. 3 plus 1 plus 1 is equal to 5. So I'm going to say 200 times 3 over 5 in order to get what is due to the factory rents. So let's work that out. 200,000 times 3 divided by 5. The rent that the factory incurred was 120,000. So let's go and put that down. You have to show me your calculation. 200 times 3 over 5. And it came to 120,000. Okay. We also had to pay electricity. What does it say about electricity? Electricity, they told us the total amount is 136,000, and for the factory it was 120. So that's nice and easy. I'm going to place 120 over there. Then moving on to sundry expenses. Okay, what did they say about sundry expenses? 25,000, and the factory accounts for 80% of that. So again, how do we work this out? 25,000 times 80%. So let's go and work that out. 25,000 times 80% gives me a value of 20,000. So 20,000 was for sundry expenses. again showing your calculation for those extra marks that you don't want to lose out on, times 80%, and that gives me a total of 20,000. Now that I have all my factory overheads, I can total that up, and if you tally all of that up, you should come to a total of 354,000 rand. Moving on to the other departments in the business, the selling and distribution, they are all about actually selling your product, and with that you are basically introduced to the customers. And remember, they also sell on credit, and you can also get bad debts. That's the risk of selling on credit, bad debts, don't forget that. And there's a lot that goes with it. Commission income, they also pay rent, they also pay electricity, they also have assets that they use that depreciate. So let's go and figure that out. Moving back, the depreciation, okay, it was 26,000, and then they said that, let me see, selling and distribution, remember sales is 7,000, so you're looking anything to do with sales. So there's our selling, so depreciation, it was 7,000. And let's just simply complete the admin as well. They also had depreciation, and they told us that amount was 3,000 for the office equipment. Okay, 3,000 rand. Let me make that better. 3,000 rand. Okay, then we had rent. Remember, the rent needed to be divided accordingly. So the rent we know was 200,000. And remember, our ratio 3:1:1. So that would mean that the selling and distribution department will be 1/5. And if we work that out, we should get 40,000. And then the very same thing would be for your admin, because they were also rent. They were also included in the ratio, and that will be 40,000. Then we move on to our electricity, and they told us that it was according to electricity. The office was 8,000 and the sales department was 8,000. So they both pay 8,000. And then 8,000. Perfect. Now we're moving on to your sundry expenses. Sundry expenses, and remember that it was worth 25,000, but then you had to calculate the percentage of 15%, and then your admin would have been 25 times the 5%. Okay, if we tally that up, there should be 375, and the other for the admin it would be 1,250. Okay, then we are going to, let me just see our commission. What is commission? It's when someone sells a vehicle and they get commission on the, well, in this case, bicycles. And then what did they say about the commission over here? The commission number 9 of 84,000 was paid to the salesperson. So our commission will be 84,000. And that is everything under your selling and distribution costs. If you total it up, it should come to 142,750. And this is everything under your administration costs. If you tally it up, it should come to 102,250. Alright, now that all our notes is complete, we can now move forward to in completing our production cost statement. So now remember, we have direct material costs, which was worked out at note number 1. So you place note number 1 there. It is 330,000. Your direct labor costs at note number 2, we worked it out to be 100,000. And remember your prime cost, if you have a look at this, your prime cost is the total of raw materials and direct labor. So you're adding these two notes together in order to get your prime costs, and that should give you 430,000. All right. Then you're not forgetting your factory overheads, all the expenses incurred by the factory, which was note number 3. And we worked that out to be 354,000. Okay, there we go. Then we need to work out the total manufacturing costs, which will be 430,000. Okay, 430,000 plus 354,000. And you should get a total manufacturing cost of 784,000. And then remember work in progress at the beginning of the year. If you remember, they have given us that in the information. That's our balances, opening balances. So that was 40,000. Okay, and if we add these two up, we should get a total of 824,000. And you will always subtract the work in progress at the end of the year, because unfortunately that is not finished goods as yet. They're still working on it. So subtract the 44,000. Okay. So with that, you're subtracting that 44,000 in order to get the cost of production of finished goods, which will equal 780,000. I hope that this video makes it easier for you to complete 13.3 and 13.4 for week 10. Thank you, Matrix.